Hello traders, welcome back to the Forex Geek channel, where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about Momentum Breakout Trading Strategy, a proven approach to capturing powerful price movements in the market. This strategy is also about identifying key levels where price break through with strong momentum, giving you the opportunity to ride those trends for potential profits. So stay with me until the end of this video as we break down how this strategy works, how you can use it effectively, and the essential tips to avoid pitfalls or common pitfalls. So let's get started. We start by understanding what the momentum breakout trading strategy is. This strategy is actually focused on price movement breaking through established support or resistance levels. Think of these levels as barriers. When price finally breaks through them with force, it often continues to move in that direction, creating opportunities for traders or creating opportunities for profitable trades. The key principle behind this strategy lies in market psychology. When price breaks below or when price breaks through a level that has been held firm for some time, it typically triggers a chain reaction of buyers or sellers. This pressure is what creates the momentum we are looking to capture. When price breaks above or below a resistance point, let's look for an example on the chart. This is a strong resistance. This is a strong support area. Let's use support zones. This is a strong support area. Price reacted from these areas, went to the upside, broke out, came back up, retested it, came back up, and finally broke through it. So when price broke through this area, you saw the strong selling pressure that came in. Let's look for a buy scenario. Look for a buy scenario. We can look at this area in the market. This was formerly a support, but price broke through it, came to retested the resistance area until price finally broke through it with a strong momentum to the upside. Notice how price consolidated near the resistance line before breaking through with an increased volume. This consolidation phase is crucial. It's where the market builds up energy for the next big move. You would often see price move sideways in a tight range before the breakout occurs. When price moves sideways before a breakout occurs. Volume play a crucial role in confirming the genuinity of the breakout. So bear with me as I add my volume indicator. When you see this breakout, you see an increased volume. Look at this area where price broke out from. You see the increase in the volume. Let's look at the other side. When price broke out to the downside, you see the increase in the bearish volume. The beauty of the momentum breakout is that they occur across all time frames. Whether you are a day trader or a swing trader, you can apply this strategy by adjusting your analysis to your preferred trading time frame. The principle remains the same. Wait for the consolidation, identify the breakout level, and look for strong momentum when price break through. Remember, not all breakout leads to a sustained move. That's why in the next section we will discuss exactly how this trade setup and how to manage your risks effectively. Now let's break down exactly how we can trade using the momentum breakout strategy. Focus on 4 key steps that would help you capture profitable trades or profitable moves in the market. First, you identify your breakout zone. This is our breakout zone. We have identified our breakout zone where price has been contained. Price has been contained in this area for quite a while. It has been moving sideways, retesting the support level before it finally broke through. So this is our area of ranging market. Look for areas where price has consistently hit the resistance area or the support level. These zones become more significant when price tests them multiple times, creating what is called a consolidation pattern, as you can see here. When you spot this level, draw a horizontal line to mark them clearly on your chart. The more times price touches this level, the more reliable they become as a potential breakout point. So let's use a horizontal line to make it easier. This is the horizontal line. Increase the thickness, change it to blue colored line. This is my horizontal line. Okay. Now the second step is your entry strategy. There are two effective ways to enter a breakout trade. The first method is entering immediately price break through the level with increased volume. Volume is crucial in this trading strategy. Let's not forget that it has to confirm that there is a strong momentum behind this move. That's why the volume is crucial. So let's look at an example of how price broke out and the volume confirmed it. At this area where price broke out, you can notice the increase in volume. Volume was not showing a low move at this, like as it's showing on this area. The moment it broke out, there was an increase in volume. The second method is to wait for a pullback after the initial breakout. This approach often provides a better price entry opportunity. When price pull back to test the broken level, when price break out to test the broken level, it should now act as a support or a resistance in case of a bearish breakout. In case of a bearish breakout, the retest, the line should act as a resistance, but in case of a bullish breakout, it should act as a support. Now, how do we manage our risks? Always set a stop loss before entering any breakout trade. Place your stop loss below the breakout level for a bullish trade and above for a bearish trade. Protect your capital if the breakout fails. This is to help you protect your capital. This is the first way to enter. If you enter immediately price breakout, you put your stop loss just above your resistance or just above the previous support area, or we can wait for a retest. When price comes to retest, you enter when price comes to retest at your breakout zone, and you put your stop loss just above your resistance level. That's how we can manage our trade. Let's not forget, position size is important. We should never risk more than 2% of our trading account on any single trade. This ensures that we are even with spring of losses in case they occur, and they would not significantly impact our trading capital. Now, how do we take profit? We have to set clear take profit targets based on the size of the consolidation pattern before the breakout. A common approach is to measure the length of the height of the range or the consolidation and projecting the same distance from the breakout point to be your take profit target. Now, this is the range. We can decide, okay, we want to measure the height of the range. The height of the range should be using my pips calculator tool. The height of the range is 23 pips. We take our tool and measure it exactly, put it in our entry point to determine the height of what we want to take as our take profit, and target that area as our take profit level. Remember, not all breakout leads to a sustained move. That is why your stop loss and position size are crucial for protecting your capital when trades do not work out as planned. Alright traders, we have come to the end of this video. Do engage with us in the comments below, and we want to hear about your experiences. If you like this video, or if you found this video helpful, do not forget to like, subscribe and share this video. Turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.